Hey traders, John Howell here. Today I actually want to do something different. Today I want to talk about overtrading and how to stop overtrading and why it's one of the biggest things that's actually killing your chances of doing well in the markets. Let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so the trading course you see on the screen right now, make sure you go get access to that right now. It's for free. So let's get into today's topic. Obviously not much is happening with the actual stock market itself. This is the S&P 500. This is basically all the different markets. We can see what's happening here. Nasdaq is, again, all markets are pretty flat through here right now. The S&P, by the way, just a quick little update on the S&P 500. If we look at this here, this still can be a false breakout. Remember, I've mentioned a few times in the past that this still can be a false breakout, right? So don't be, don't be, we need to see what's going on here, but this still could be, again, it could still be that there. So let's actually talk about this here. So the big thing that I want to share with you, and I haven't done a presentation on this, but I just want to talk about this. I'm going to talk over this here, is that the big thing that we see, or the big thing that I see in trading is overtrading, right? So I'll give you guys an example. Is that I think one of the biggest things out there that stops most traders from doing well out of the market is your foundations to your success, right? Your foundations to you doing really well. Now, what is that foundation? What are those foundations to you doing really well? The foundations to you doing really well out of the market is firstly knowing what a good quality setup looks like. What is a really good high quality setup? What does that actually look like? That is your foundations. If you don't have that, that's when you need to go get to work, right? That's where you need to go get access to my free trading course, go get access to that right now and start to learn what actually goes into a really good quality setup, okay? So that's the very first step that we have for. Because if you don't have that, guys, you don't have shit, right? You don't have nothing. And it doesn't matter what Peter Schiff says, or Ray Dalio says, or Paul Tudor Jones says, or Johnny Howe says, it does not matter. You're not going to be long-term successful. We could give you a tip. Oh my goodness, this thing's going to the moon, and you buy it and you make a little bit of money. Now, that's not long-term successful. What is long-term success? Long-term success in the markets is being able to have a high quality system, like the system that I trade has over a 90% success rate. For example, I've had 5 trades this year, 4 wins, 1 small loss. I've had only 2 trades this month. But both of them are really good, solid profits. Not a small profit, but a really good, like getting close now to a few 100% return on my risk type of profits. Okay, that's what I'm talking about. Like, what does it actually look like on the chart? That's your very first foundation. If you do not have that, then you're not going to be able to get ahead of the markets. Okay, so that's the very first thing that we need to be focused on when we're actually trading these markets. And again, if you don't have that, that's your foundations. How do you expect to know? It's like when you go to the market, you're looking to trade. I'm like, okay, cool. Let's go to the markets. Let's trade. Cool. What are we looking for? I don't know. I'm just going to make it up. Oh, this looks really good. No. Step back. We're going to go to the markets. What are we looking for? I don't know. Okay, well, if you don't know, then how do you know you're not going to find it if you don't know, right? So very first thing is, what are we looking for? What goes in a high quality setup, and what do we actually need to do to get there, right? So that is the big thing that we need to notice on when moving forward in these markets here. And so like that's for example, that's like one of my girls' analogy when she said that recently. She said like goal setting, right, is like having a destination of where you're going, right? We have goals and we're trying to get there. So that's like hopping in a car and going and driving, but to have nowhere to go. You don't know where you're going. You don't know what to look for on the maps, right? So therefore, that you got to get lost. So the very first thing, your foundations to you not over trading is very have a trading setup. Now, once we get that, again, I teach you my setup setup in that link in the description there. I teach you that for free. So that's the very first thing we need to be focused on. Now, what is the actual next thing here? Now, this is where the real work comes, where most of you guys suck. I've been trading the markets now for 19 years myself, and guess what? Good chunk of my half, I sucked as well too. And this is where most of you go wrong, right? You're trying to get the quick tip, the quick thing, right? No, there's millions of different systems out there that work, but what makes them work? You, right? You. Now, I call it the 3 pillars. And there's levels to these 3 pillars. So here we go. First thing is, what are we looking for? You don't know what you're looking for on the chart for a good trading setup? Now, let's actually go to here and let's actually start to make that work, right? Let's actually focus on that. So what we need to focus on is what we're looking for and then the 3 pillars. It's called consistency, discipline, and patience. And they're 3 pillars, but they go deep. Consistency. Now, you want to be a professional trader? This is what they have. What they're looking for? Consistency, number 1. Consistency of market. What market are you trading? Consistency of time, right? Meaning what time are you trading and what time, meaning like, are you trading from 3 o'clock in the afternoon through to 4 o'clock in the afternoon? That time, but also what time frame are you trading? For example, for me, all my trading is done is half an hour per day. I trade from 3:30 p.m. to 4 o'clock p.m. The last half an hour of the US stock market close, right? That's what I trade. So when I trade that, and when I'm trading that, that's my time that I'm trading. Now, I'm not getting in I'm not short-term trading there. I'm getting in because I'm trading a daily chart, meaning I'm looking for trades to get in today and hold for a few days. And like the trades I've been in right now, I've been in for a few weeks and they're still running on for really nice profits, right? So it's consistency of market. What market are you trading? System 1, what are we looking for? Cool, we got that. Now it's consistency of market, consistency of the time, me it's 3:30 through to 4 o'clock. Consistency of time frame, me it's always looking at the daily charts for setups. And then also consistency of system, consistency of market, consistency of time frame, consistency of system. Meaning that every time you get into a trade, the consistency of that system is the exact same. If I showed you all my bullish trades last year, you would say, John, if I showed you them, you're like, oh, John, I get it, right? It's all the exact same thing because they all look the exact same identical way, right? That's what we're looking forward through there. So if I showed you all my bearish trades, you would then you'll see that they most of them look almost identical to each other. Why? Because it's consistency of system. Now, once you've got that, then let's flip it over to the discipline side. Discipline. We all have heard this, right? Discipline. I was talking about this with some of my private clients, right? Discipline is saying, okay, this is what I'm looking for, and if it's not that, I'm not going to say yes to a trade. Because what we can do, right? We can have what we're looking for, but then suddenly a trade comes up that almost looks like what we're looking for, but not quite. And then we'll drop our discipline, drop our standards, and we'll go take that other trade that's not there, like a trader almost did in my coaching practice yesterday. And I told him not to because it was, or I didn't tell him not to. No, it was a trade that he should have got into and he didn't get into, which is good. And then that causes a stop out, right? That causes a loss on that time frame there. So that's actually the really interesting thing there is that your discipline, right? Your discipline is actually stopping you because there's going to be a lot of maybe trades or what looks good trade or what a YouTube video says or white paper or subscription, blah, 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 blah. All that is just talking heads, right? So therefore your discipline, because for me, there's a lot of maybes, there's a lot of no's, and there's only a few yeses. The few yeses is what you want to trade, right? And then there's patience. I call it patience in, patience out of the markets. Patience in, patience out. Now, what is that? What is the patience in, patience out? The patience in and patience out is all about patience out means if you're not in a trade, you are patient out of the market, waiting for that next really good high quality trade. Exactly what you're looking for. Patience out. Now, sometimes we need what? Patience in. What is patience in? Patience in is the ability to be able to be in a trade and stay patient and allowing it to move, right? Because if you're very emotional about that, then guess what's going to happen? You're going to be getting out really quickly. And remember, for big profits to come, you've got to have a way of protecting those profits, but also letting your profits run. And sometimes for me, sometimes I'm in a trade for a month because I'm letting those profits run, right? So patience out is waiting for the trade. And then when we get a good trade, sometimes these trades need time to run on. So you have your stop loss in place and so on and so forth, but we need to have patience in the markets while the trade is happening. Because remember, big profits come from big trends. And sometimes those trends can sometimes last for a few weeks, sometimes for a month. When it comes to trading opportunities, make sense? So they're the four major things. What are you looking for? Consistency of system, consistency of consistency of time frame, consistency of system, discipline, and then also patience in and patience out.